welcome to the Australian Stock Market Show. We do hope you've had a great week so far and are staying safe. 'Tis money that begets money. This is an English proverb. People often wonder why people who are already have a lot of money make more. The rich seem to get richer and the poor poorer. Ask yourself, is this because they have more time, or are they more intelligent than others? Or is it that they just know how to make money? Tonight our aim is to share with you how you can better understand the stock market and how to profit from it as we educate and inform you. We will also answer your questions as we bring you our upfront, no BS approach to all things stock market. Our main topic tonight is the top 3 stock opportunities, how to make it rich from long-term investing. Hi, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Hello, Ms. Cox.
How are you?
Very good.
Good, I'm glad to hear it. So what's been happening in your world?
I've been out in the garden.
Have you?
Yeah, cleaning up after, we had so many heavy rains, heavy winds, storms, We've had earthquakes.
3 seasons in one day yesterday.
It's not COVID that's giving me the irrits, it's everything else. It's just like, it's constantly windy, constantly rainy, constantly this, everything else. And one palm tree that I cleaned up the fronds for took me about 2 hours just to carry them all away. So it was just, busy. And snails in my pot plants.
Really? You hate snails, do you?
Well, I don't hate snails, but I don't want them eating my plants.
Right. So I hope you bought a natural solution.
Yeah, it's very natural. Very natural.
I think you better do your research.
Something like that anyway. Well, anyway, before we get into our first segment for tonight, again, we'll take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and call us. Now, the number you do need to call is 03 for Melbourne, 92909988. That's 92909988. Now, I definitely know Janine and I are super keen to chat to you. So pick up your phone and get dialing us now.
While we wait for you to call, it is the first Tuesday in the month, and this means we take a look at the Australian stock market. So let's get into the charts.
Now, on your screen is an All Ordinaries Index chart, isn't it? It's a monthly one.
It is. I know. I thought I'd surprise you by leaving some of your... this was part of your explanation you did when you were doing your market report, I think,
Correct,
wasn't it?
every Monday. That's why I'm not going to talk too much.
Okay.
So you can talk, because I need to hear your voice.
You're a record that's worn out, is that the case?
Well, I do this every single week, so it's nice to have a different opinion. Well, not necessarily a different opinion, but a different view of it, a different perspective.
Now, this is the monthly chart, right?
Correct.
Obviously, the thing that I'm excited about is the fact that our market actually traded, now I'll put the crosshair on over here so they can see it, is traded above that prior high, but it may be close to coming back to test that high. Now, that high is actually 7,289.7 points. So that was the pre-COVID peak that we saw on the market. So you're actually saying a similar thing, although you're talking about it coming back a bit further, between 5 and 12.
Yeah, I'm thinking 7,200 below that. Which is only just marginally below it. So it might just peak below it and then come back above it, or it might go a little bit further. But I really don't think it's going to crash. Now, we did have a question sent through from somebody for tonight, and part of the question was asking about saying, well, we talk about when the All Ordinaries Index goes below a trend line, then it's likely to fall further, which is exactly what it's doing now.
Okay, yep, good point.
And so we're not going to answer that part of the question.
Well, when you're saying a trend line, this is like a monthly chart that I'm showing.
Well, that's not really a trend line that we've got there.
So when I'm looking at the weekly chart, that's what you're talking about, isn't it?
Yeah, so it's below a trend line on the weekly chart, and the momentum has really slowed down. So looking at here, we're seeing the All Ordinaries Index is well and truly below the trend line. Yep. We're over 5 weeks from that all-time high back in August. So that's about 5 or 6 weeks ago now.
Now the question is, if we look back over the past 1.5 years, 2 years, say, we can see there that the biggest fall that we've seen since the COVID fall is 6.57%. So at the moment, the market's actually only pulled back. Let's have a look.
Yeah, 5%.
5 point something percent to that low there. So it's in the ballpark, isn't it, of what has happened in the last 2 pullbacks, including this one that we saw here in March 2021. But it's abnormal for the market not to pull back more than that. If we go back in history and have a look at how far the market pulls back, we'll often see it, and this is part of the reasoning that you've applied to to this current period right now is that generally the market will pull back around that 10%, 15% mark, won't it?
Well, we've studied, both you and I have studied the markets back 100 years. We've got data on the Australian market back to 1875. We've got data back on the Dow back to 1900. And when something happens 7 out of 10 times or 8 out of 10 times, and doesn't happen 1 or 2 times out of 10, you don't just change your whole strategy because of that, because that's normal. And that's really what I'm saying is we've had 2 small pullbacks since the COVID low of 5, 6-ish%, not the normal sort of 8 to 12%.
Yeah, so you're saying it could pull back, around the same amount or maybe a little bit more,
Correct.
but then it could do a full
It could do
decline.
it. I mean, that's what I was saying on my market report yesterday. We are in the time for a low. We could be having the low. We may have done it, but I just don't think it's done enough yet.
And I mean, Commonwealth Bank took off this week. So the banks have to pull back for the market to actually have a decent pullback. And we've already seen the miners have really significant falls. So there's a small area of a window in terms of how far they could fall before they stop completely. They may stop now, but there is still a little bit of potential downside there. So if the banks go up temporarily and then they all pull back for that last move down, we could see the market move into this low, but we need both of those sectors to really pull back to create a big enough decline like the 12% that you're talking about.
I know that the issue a lot of people have is, like if a stock's or a market's crossed above a trend line, and it starts to move up and people own a stock, they're not worried. They don't think, how far is that going to go? As long as it's going up, they're okay because they're not losing money. But when it does the opposite, now there's a lot of people uncertain. They're going, what's below the trend line, Dale? What do I do? What do I do? Because nobody out there knows, or most people don't know how far it's going to fall. So it's like that unknown. And their stocks would be falling over and starting to lose some of their profits or having some losses. So,
especially if they've got the miners and they're holding on to miners that have fallen significantly.
Yeah, and I mean, even yesterday when I was, on YouTube, looking at our YouTube videos and bits and pieces that we're doing, there's still lots of videos out there of people saying the stock market's going to crash. There was one yesterday that Robert Kiyosaki, I think it was yesterday, I saw last week Kiyosaki's out there was talking with some journalist saying that we're going to have the biggest crash in October.
Really?
And I was like, seriously? It's not going to happen. I cannot, there's nothing in my mind that would even be close to the US market crashing in October.
Yeah, so what you're saying is that it could have a significant fall, but not a crash and not a stock market crash.
No, it can have a significant fall, but a crash, we're talking a 25% plus pullback.
Yeah.
And that's just not going to happen on the Dow or the S&P 500 right at the moment. You can't, because every time the US market has just voted to fund the government again last Friday till the 3rd of December. Now, they're still pushing money into the economy. So they've got to look at, do they change their bond buyback programs and other stuff to the money. But when money's moving into the market like it is in Australia and in the US, they can't crash.
Yep.
Because money, it doesn't matter, the government's pushing out money, it's got to end up in the market.
Look, I take a different view. I'm going to sit on the fence a little bit. I'll say you can never say never in the stock market because anything can happen. And I guess at times you'll say that and you'll just suggest that investors be prepared for anything really and have a plan.
Absolutely, because we could have had the low right now and we might be moving up again from now, but I think the probability is on the side that we're going to fall another 5-ish%, maybe 7%.
Okay, cool.
That's my take.
Okay, that's all from us on the Australian stock market. Now it's time that we get into our first email for the night.
Okay, our first email tonight is from Chris. In fact, tonight's a Chris night. We've got a lot of Chris's tonight. Chris actually says, hi, a couple of weeks back the key topic was how to avoid a stock market crash. One of the guideposts was whether or not the XAO closed below the trend line as month's end, which we just discussed. As we come to the end of September, it appears that the All Ordinaries Index will end below the trend line. Now, on this basis, are we likely to see a market fall materially lower, and should we be preparing our portfolios for correction? Thanking you in advance. Now, I think we just answered that question for Chris anyway. So I only left it in there because I didn't want to answer the All Ord stuff, but it's about portfolios I wanted to get into with Chris. Because a lot of people thinking, my portfolio, if the market's going to come down, what do I do with my portfolio? But I'm going to let you answer that.
Really, that's very kind of you. Look, I mean, the challenge is for an investor, depending on what time frame you're investing, is to sort of put it in perspective because you don't know how far the market could fall. But it's always about knowing in advance of the fall how much risk you're willing to take and then just having that plan and sticking to it rather than, because if you're asking the question of what do I do, then that's probably showing that you don't have a plan in place. And so therefore, the beautiful thing about having knowledge is that you don't have to ask anybody. You can make the decisions yourself and do it with confidence. So I guess that's my real take on it.
And I think the answer is also, if just because the market's falling away doesn't mean your stocks are falling away enough for you to have to sell them. Because, how many times have you seen the market fall away and your stocks rise, or some of the stocks rise in your portfolio and then some of them have gone down and you think, I might need to sell this.
Like CBA pulled back and then all of a sudden it went up again.
I've had a couple of stocks in the last few weeks that I've got to sell those, and then they've turned and gone back up again. And to me, that's what happens sometimes, Chris, and it's about having good solid rules about how to protect your downside. I'm going to talk more about that later.
At the same time, you can't sit there hoping that it's going to turn around and go back up when your rules are triggered.
No, correct. And that's that unknown that people don't know about it when markets and stocks falls. And I think, to me, that's the more important. Anybody can pick a stock that'll go up if you keep picking. Yeah. It's just managing it if they start to go down. I think people aren't doing that. And that's really what the point is in my mind.
Our next email is from Sid. Hello, Dale and Janine. I have a question regarding Archer Material. I see a great potential with their second quarter. Is it quantum computing?
No, it's 2CQ. It's a computer chip that they've developed.
That's right. You did the research on that and told me about that. I've purchased at $2.30 and I got 2,164 shares. I've purchased on the month of September 2021. What impact will it have on its price when iTech shares comes out? AXE is waiting for an Australian patent and European patent for its 2CQ chips. What is your opinion? Should I keep it or sell it? Thank you, Sid. So interesting. I like the fact that they're actually demerging something.
Correct.
So often that can unlock value for shareholders.
Yes.
So instead of having one piece, they've got two, but in theory, if both of those go up and at different rates to what the original share went up, you've actually got a bonus there. Yeah. So that's probably a plus. But the one thing that I wanted to share, if you don't mind me saying this, is that when a company is demerged from another company, there's a temporary period of time on the market where the chart just looks odd. Okay, so often the chart looks like the stock's fallen out of bed and is plummeted because that's the value of the other share that's coming out of it. And it can take a little while for the company, because they've got to make a submission to the ASX, and then all of that the data gets adjusted. So just be mindful of that when that process occurs. I
think iTech is coming out of or splitting off of AXE this week. I was reading some stuff on it yesterday. They did a $15 million capital raising. They were in a trading halt recently. They've just come out of that. They're raising another $5 million from shareholders, and obviously this split is coming up as well. So that's why he's a bit worried about it at the moment. And
I can understand that, because when the companies raise capital, quite often the share price can actually languish for a while and can actually fall while that process is underway. But it just depends on the company, depends on the take-up of those shares. If you start to see, I don't know the breakup of the institutional buy and the retail purchases and how they've structured that, but if you see the institutions taking up the stock, that can often be a really good thing for the share and may support the share price in the short term.
Now, if you want to chat to Janine and I on the phone, just give us a call, 92909988. Just give us a call now. Do you want to have a look at the chart before we go to the next question?
Do you want to?
Well, we haven't looked at the chart, have we?
Okay, why not?
Yeah, let's go.
Go for it.
No, you can go for it. Ladies first.
Okay, you can see there that it's actually fallen a little bit this week. So that you would expect to be the case.
Coming out of the trading halt.
Yeah, okay. So it's come out of the trading halt and dropped down, but it'll be interesting to see whether it actually starts to claw its way back up and whether the market picks the shares up. So I'm just going to show the effect of that on the daily chart. So let's just have a look there. And it's just got away from me there. So it's fallen below important support. There is a little gap there on the daily chart. I don't see it as being too concerning at this point in time. It could head down a little bit lower maybe for another day or so, but I just watch now just to see how the market handles it. Yeah. And like I said, so the trading halt is showing you what would you say that means?
Well, at the moment, obviously a trading halt because they were announcing what they were doing and some of the other stuff that they were doing, which they have to do. But right now, that looks a bit bearish to me. And I don't really understand why he bought where he bought. I think it's, he may have read about it somewhere or seen it moving up or whatever else.
Often reports come out before they're going to do these things, make it sound great. Brokers put the information out and then people buy in not knowing The most important thing that you can ever do, if you're ever thinking about buying a share and there's a corporate action coming up, have a look at how other stocks behave and do some searches online, have a look and see if you can find it, and then look at the chart to see what occurs. The Cochlear had one. There was the Wesfarmers demerger of Coles. Have a look at that. Just compare some of the different companies that have actually demerged another company and then the result of the shares. They're not all going to perform in exactly the same way, but it'll just give you a really good indication of what could occur.
Good answer. Good answer. Okay, moving on, we do have a question from Stuart who says, Dear Dale and Janine, could you please share your thoughts or your current analysis on A2 milk? Do you think it's confirmed to bottom or is the risk still to the downside? Now, I don't own it yet. Not trying to bottom pick, so I'm waiting for confirmation. Thanks, Stuart. Very, very wise words, Stuart. I know a lot of people have been trying to jump into A2 milk, trying to grab a bargain. Yeah. But I'm not convinced it's stopped falling yet, but it's close.
Yeah, I agree with you. Like, the risk is still to the downside if the stock is not moving up yet. That's as simple as it is. So we're just watching it at the moment, and 1 or 2 weeks up does not make a bullish move on any stock. It is going sideways essentially based on the movement that we've seen, and people can get tricked into thinking when a stock's fallen dramatically like that it can never go lower. But a stock can always go lower. It can even take out its all-time low. We've seen lots of stocks do that, and people think that the stock's going to stop and they buy in, and then all of a sudden it slips lower. But in the case of A2 milk, I think there's a reasonable probability of it recovering from here. But it's about being patient and waiting for a confirmation of a move up, which we don't have yet.
No, do you want to show them stuff on the chart? You've just talked about it.
Look, on the monthly chart, you can see there the big decline down. So we'll just first have a bit of a look at that to get an indication of the sort of move that we've seen to the downside. So 75% fall to the downside. Now, often when stocks fall that significantly, there can be a period of temporary recovery that occurs, and you need that little recovery to start to unfold. And this is where people who are taking the highest risk are getting into the stock. So we've seen that happen over recent months. Look, I'm going to reserve my judgment at this point, actually. I'm going to sit on the fence. I don't normally do that, but at this point I'm going to. I think there's a potential for upside to about $8 or $9 in the short term. However, I haven't seen anything yet that's telling me that's going to happen.
I mean, look, my interest meter's gone up, but it's not up at the level where I'm buying yet.
Look, it's on our watch list. I'm going to have to say that it is a good stock and it's on our watch list despite the fall. But yeah, I would be applying a little bit of caution, and it hasn't triggered any of our rules yet, so that's part of it.
No, and I know a lot of people that would think, oh, it's cheap, and they're bottom picking, they'd be jumping in thinking they're doing a great thing, and they might end up winning.
You know what? It doesn't have to fall far to take you out and get stopped out. Let's just have a look at what happened after it took off out of this low here. So, some people actually told us that it fell 20% to this low here after a potential trendline entry. So, this is where trendline is one rule that can be used, but it's actually a combination of rules that sometimes is actually provides a better result for shares. And this is where you have to become the scientist and understand the stock really, really well and know its history, and not just jump in thinking, oh, look, there's a rule that's triggered. Well, hey, you haven't done your research. You're just going on one little piece of analysis, and there's actually a whole lot of stuff that has to be done on the monthly and weekly charts before you can make that call. So that's really all I'd have to say at this point about that.
That's all on A2 milk then, hey?
All right, our next email is from another Chris. Well, Chris is popular tonight. Hi, Dale and Janine. Just wondering, was it the same person?
No, all 4 different Chris's.
Just wondering, could you have a look at Star Pharma Holdings? I bought in on September 27 at 146. My portfolio is made up of top 100 ASX companies, with SPL being the exception. SPL appears to have broken a confirmed downtrend line on the weekly chart. A new uptrend has not yet been confirmed. However, I did like the look of it for the short to medium term. I'm hoping you could confirm that my analysis is correct on this one and how you see the chart unfolding in the near future. Regards, Chris. Thank you very much for that one.
Very good.
All right, let's have a look. Extremely volatile is the first word I'll use. How do you want to describe that one?
Well, I think you did that. I don't think I need to add to extremely volatile, and except, I agree with you on that one. But what Chris is talking about is obviously he's a trend line, something down sort of this sort of area through here, roughly. Yeah. And he's saying, okay, it's broken a trend line. But a trend line is one rule, as you just said. It doesn't always say the trend is going to change just because it's broken. There's other rules and things we add to it to add confluence on it.
Yeah.
And sometimes you'll see a break of a trend line because this could just be the easing of, let's say, the sellers just easing back from selling, just not selling anymore for a while, waiting for price to drift up before they start.
But it could just be a false rally. So it could be that the people who are pushing it down are actually just stopping for a little while. People who are opportunists try to get in when it's, when it's higher risk, and then they push it up. And then the stock eventually when those people stop transacting and just falls away. So that's
So
the sellers take over.
Did Chris actually say he bought it? I just can't remember. He bought it
146 on the 27th of September.
So I mean, he obviously bought it on a trend line rule, which is not a bad rule, but that's also why we have stop losses too.
So is he stopped out yet?
I've got to
Depends on what stop loss he set.
Took my glasses off, put them back on again.
He could have set something. He could have set his own stop loss rule. It doesn't have to be what we talk about in the book.
Well, from that level, if I turn that off.
You're a bit rusty at the moment, aren't you?
Well, geez, look at that.
So it's hit the 15. It's gone through the 15% stop loss.
17%. So that's why we have stop losses. It really is why we have stop losses. Right now, I mean...
So look, if I was holding that, I'd probably, if I didn't, it depends on the actual rule that I had, but I would just be watching to see what it does by the end of the week. And, it depends on how much you really want to risk with your trade. But if you had a 15% stop loss, then you'd be looking to get out.
Yeah, well, I don't know what day he sent that email, and he might have... This is the last 2 days, that last bar on the chart here, so that's Monday and Tuesday, so he's not looking.
But obviously, if he's used a trend line to get in, he's got his own rules to get out.
Well, hopefully that's what we want. Cool. Now, before we get into the topic for tonight, later on in the show, we will give you another opportunity to call into the show and ask Janine and I your most burning questions. So stay tuned for this opportunity, and more importantly, be ready to dial when we tell you to call. So you just got to pull out your phone and give us a call. Now it's time we get into tonight's topic, which is top 3 stock opportunities, how to make it rich from long-term investing.
The key to making riches in the stock market requires you to know the 3 keys to long-term success. In our experience, we've found many investors miss out as they tend to pay attention to a big market myth. So right up front, we're going to debunk this myth as we want you to achieve better results in the stock market.
Now, we'll also give you our guide to making riches in the stock market safely, and we'll do this by explaining the 3 keys to successful long-term investing. Now, once we do this, you'll be able to incorporate these into your own strategy and as an added bonus, we're also going to share 3 long-term stock opportunities to put on the top of your watch list.
What has always amazed me about human behaviour is how much it is like a merry-go-round as the masses repeat the same behaviour over and over again. Every year we see investors repeat the mistakes of the past in the stock market, and this is a perfect recipe for generating poor returns or failure. Often this is caused by them holding on to false beliefs and following myths.
Now, one of the biggest myths is that to make money in the stock market, an investor must buy and hold. Now, whilst we agree wise investing is about time in the market, and without time, not time in the market, without timing the market, don't laugh at me.
Spit it out.
Basically, the timing in the market you take on, when you time, I can't say that, can I?
When you time the market, when you don't time the market, you take on maximum risk.
That's
and
what I was trying to say.
it's for this reason that timing the market is far more critical to your success, regardless of the time frame that you're trading.
Thank you.
Now, Dale, you wrote How to Beat the Managed Funds by 20% to share some of the market myths and to debunk this very important one. What had you observed before writing this book that drove you to want to share it?
Yeah, look, so many people had so many myths, and that's really what I was talking about. Like doing seminars and speaking at expos and keynote speaking and all the things that I was doing, so many people had all these bad habits or bad understanding, like the stock market is dangerous, or the stock market is like gambling, and buy and hold and dollar cost averaging, and the list just goes on and on and on. And people were getting poor returns, and I'd be seeing lots of portfolios before that, the years before that in my work with other companies, I'd see people with portfolios of 30, 40 stocks. And you'd look at them and they've been holding them for decades,
Or little tiny positions and then huge positions outweighing the rest.
Lots of little positions and adding to positions all the time. And
I think it was before the GFC that really hit the most, wasn't it? When people were coming, talking to us about it and they had no plan. That was probably the biggest.
Well, it was all that.
Thing.
Back in the 90s, you had a lot of people, but we didn't have sort of the internet trading at all. It was always, you had to ring your broker. And it was really interesting when somebody would come and see me and I'd go, who's your broker? And they'd go, I'm with Ord Minnett. I go, okay, so you've got Westpac. And they go, yeah, how do you know? And then somebody come in and say, oh, I use JB Were. And I say, all right, you got NAB. And they go, how do you know that? Because that's what they do. So you'd never see a JB Were portfolio without NAB in it, or an Ord Minnett one without Westpac in it, because Westpac owned Ord Minnett for it. And so that's what we used to see all the time, but it was all buy and hold, and it was just, and the performance was terrible on a lot of people's portfolios. I thought, it's not that hard.
Well, the market fell 55% with the GFC, and that really threw a lot of people.
But 87 crash, all of that sort of stuff. So I was seeing people out of the 87 crash and looking at their portfolios and how they were decimating their returns and not doing very, very well. But okay, well, it's time we actually move on though, Janine.
All right, fantastic. What I find exciting for long-term investors prepared to take the time is they can study how the market really works and so understand how to profit more from the myth about buy and hold. It is important, though, to remember that money constantly transfers from the uneducated to the educated in the stock market.
Yeah, now Buffett says that the time to get interested in the stock market is when most are not. Now, whilst we believe this is wise, or it is wise to do that, it doesn't mean long-term investors should buy when the market is in a major decline, as this is the highest risk time to invest. Long-term investors should take a bird's eye view of the market and always be an observer of what the masses are doing, and quite simply, do what they don't do. Or don't do what they do. Sorry, don't do what they do.
One of the keys to successful long-term investing is to stick with a selection of the biggest and best stocks on the market and buy when the risk to invest is low and sell when it's high. Now, I know at times we may sound like a broken record. You don't know, or you know you don't have to watch a lot of stocks. And this is the thing that I found interesting when we met a lot of people face to face. You just have to look at a few good ones.
Just a handful of good stocks and you'll be fine. Now, the one great thing about buying the best stocks on the market is that they are more forgiving if your timing of your entry is out. Now, if you have a long-term horizon, then you're more likely to be able to ride out short-term volatility. That said, another important key is that you always have a plan to manage your risk, and this means you must have a good exit strategy, or at least know what you're going to do if the stock falls below an acceptable level.
Correct. It's vital that you make sure that you decide what this plan is before you buy, as this is the point when your emotions are not likely to affect a decision about your exit strategy. And many investors get lured into buying investments they should steer clear of that are not in line with their plan, and so they end up taking risks well beyond their capability and outside of their ability to bear loss. Yeah,
now the third key is a big one, and it's being consistent. Now, investors tend to chop and change, chasing what they perceive will get them better returns. So have a plan and just stick to it. And this includes to regularly add cash to your portfolio so that you not only benefit from the capital growth, you also continue to build and compound your returns.
Dale, and I could have added many more of these, to this topic tonight, but we wanted to keep the discussion to the most critical ones.
Yeah, absolutely. Now, before I get Janine to bring up the stocks that she believes present good long-term opportunities, I really just wanted to summarise some of those three keys that we did talk about. So the first one up there is select the biggest and best stocks on the marketplace. Now, I know a lot of people go, they're too expensive, blah, 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 blah. But I handle that in my book.
Yeah.
It's not good. Expensive. They're the biggest and best stocks for a reason. They'll give you less headaches. They'll make you far more money, And so always look at those. The second key is always have a plan to manage your risk, including a stop loss. Now, this is really, really critical. A lot of people buy and hold and they don't have an exit strategy.
So we're not talking about set and forget.
No. And I was chatting with about this with an expert only the other week, and I was explaining how with the market rises and your portfolio will rise, but when the market crashes and you've got an exit, the market's going to go down, but your portfolio is going to stay up here. It'll drop a little bit, but it'll stay here. And then when the market rises, you're rising from here. And then eventually the market falls away and you've got a bigger gap. That's how it works. So buy and hold, you're going to go with the market all the time. Last one.
Okay, everyone's waiting.
The last one.
What?
I just said the last one. Be consistent. I didn't even talk about that yet.
Oh, okay, you're giving it to me. I thought you were going to do all three.
No, get with
We're
the
not
program.
on the same wavelength,
Okay, be consistent. That's what you need to be doing. So have a plan and make sure you consistently follow it. I find so many people chop and change all the time. They say, oh, this fund's making more money or this stock's making more money. So they move out of one
Actually, it's interesting
fund.
You say that because at the moment, then people are getting encouraged to look at different super funds.
Yep.
I had a conversation with a friend, and this is not giving giving any personal financial advice because I'm not qualified to do that, but I just asked them, were you happy with your fund's performance over the last 10 years? And they said yes. And I said, well, so does 1 year make a big difference to you? Is that going to cause you to chop and change? And they said, no, actually no, but I've been told to go and have a look at different funds and have a look at the performance. But what if the ones that have been performing really well now in the next couple of years perform poorly?
But that's what I say to people in my book, my first book, How to Beat the Managed Funds, is people see the return of another super fund or another managed fund that's higher than the one they're in and they go, oh, I want that one.
Is that the story of the grass is greener or not?
Yeah, it is. It's always green on the other side. But the thing is, if you're in the best managed fund in 1 year, the best managed fund in any 1 year is not in the best managed funds the next year because the only way is down.
Right.
And if you're in the worst one, the only way is up. So if yours performing okay, don't chase other returns. Be consistent, stick to your plan and keep doing it.
Okay, everyone's waiting to see what the stocks are, so we better get into that next. So we've got a look here at a long-term list. It's not just a short list, and I didn't choose the same stocks that we choose every time I talk about big stocks.
I was getting bored with him.
Pick some other ones. Are you ready for this?
All right, so then we're going to go onto the screen.
Yeah, we go onto the screen and have a look.
I'm there, I'm with you.
So on your screen right now, I've got the top 50 stocks. So that's what I'm talking about.
You've got the top 50 stocks.
So you've got to have the top 50 stocks.
Okay.
I'm only joking.
All of them?
I knew you'd get that reaction.
All of them?
Yep.
Okay. Who's got enough money to buy all 50 of them? 1,000 in each, that's 50 grand.
That breaks portfolio rule number one.
It does, on my portfolio.
Okay, so look, looking through the list, there are some great stocks in our top 50. There are stocks like BHP, Rio and FMG, which are down significantly at the moment. They're not always going to be down.
Well, they're all steel stocks, and I still wouldn't buy them.
Okay. Not wooden stocks.
No, they're not wooden stocks, and I wouldn't buy them either.
Look, some of the stocks on the list, healthcare stocks, always be thinking about healthcare stocks like CSL, but there is a right time, obviously, and a wrong time to be in shares, which is what we're talking about. And there are some stocks that are really extended at the moment. Some of the banks look extended at the moment. We're waiting to see those banks pull back, but then Commonwealth Bank's taken off.
It's gone up again this week.
You know, we said we wouldn't necessarily be buying right now, but we're waiting to see it top and turn. And I would look away from, even though stocks like, say, Horizon Holdings could be good at some point, they're more risky. I'm talking about from a longer term perspective, the aim is to take as low as risk as you possibly can and buying something that's still going to give a good return over time. So a really good way to look at it is to go and have a look at each year, it's each financial year, and see what some of these companies have done for the last, say, 5-10 years. Preferably 10. If you're only looking at 5, then you're not looking at what's happened through the GFC, and just get an idea for what happens over time in any 10-year period or in that particular 10-year period.
I think,
Now,
I was just going to say, it's about focus. A lot of people think buying the best shares is looking at all 500, but it's not. It's about focus and narrowing down that selection into a small group
Actually,
of
that's
shares.
a really great way of putting it. So you've actually just taken the words right out of my mouth. So what was taking me a couple of minutes to explain, you've explained it in about 10 seconds. All right. So now you're going to look at me and sort of put your eyebrow up, I'm sure, when I bring up Sydney.
Both eyebrows.
Because I really want to get the tissues out and have a cry.
I know.
Because Sydney is actually one of the best stocks that super funds can have, long-term investors can have, but we're talking about a takeover situation, which I think is just totally wrong. So anyone watching the show, you know how I feel about this, but that would have been one of the top ones in my list had it not been for the current situation. No, I just wanted to have that cry.
Okay.
Okay. The ASX
another one.
is one on the top of the list because if the market goes up over time, the ASX is going to go up. More mergers, acquisitions, when there's more corporate activity, the ASX benefits from all of that. The bigger the market gets, the better it is for the ASX. But at the moment, we're just seeing a bit of a pullback. I'm not suggesting that we're talking about these stocks being good for the watch list, not necessarily saying to buy right now. So we're just seeing a pullback on ASX.
Long term, the timing is, you don't need it to be 100% accurate.
Longer term, if your perspective is longer term, that's fine, but you still need to have a rule to get in, right? So when it's pulling back, we're not trying to catch the falling knife, as you always say. I'm just, talking about your general comments on catching falling knives.
Don't catch my knives. Okay. Next up.
All right. Okay, Rio.
I like it.
Is another one. We've seen a big pullback on Rio, but I just think Rio is such a great company. There are so many good opportunities for Rio, and we're still below can you believe it? We're still below the GFC high after all this time with Rio. I just don't think that that's going to be the case for too much longer. Looking at Rio, there is a risk to the downside in the short term for Rio. So we're just seeing a bottom pad out. I'm not suggesting that the bottom is in yet. We've got no confirmation, but this would be one that I would definitely have on the watch list when it confirms it's turned around. And I've had Rio on the list before because it just doesn't go away for me. It's just constantly in my
I was
thinking.
thinking in my head, when are you going to bring up Coles?
Yeah, Coles was another one that I would have on the watch list. Now, at the moment, it's challenged this high. So the high we saw pre-COVID, the stock still hasn't gone through it. So I see a big opportunity for Coles at some point that it will take out that high.
Yes.
And long term, I think it's a good proposition. At the moment, it's trying to test previous support, so we've just got to see it start to move back up again. I think it was really positive that it took out that high. Obviously, if it continues to fall away, then you wouldn't, if you were holding it, then you would seriously consider cutting it off at the knees and just letting it go until it turns around and goes back up again and you can confirm it. Because if it falls too much further, there is, of course, a risk that it could take out that low. So that's what you've got to be considering, the upside potential and the downside. And you don't want to sit on a stock for too long that's taking the profits away from the other shares that are rising. That's really the point. So even when you're long-term, I guess that's the thing people think when they're long-term, I won't worry about it, it'll come back, I'll just put it in the bottom drawer and leave it. But
that kills your portfolio.
We've seen stocks. I mean, Brambles is a classic one. I think you just wouldn't hang on to something like that.
Well, I mean, A2 Milk was one of them. People have been still holding.
A2 Milk, people were thinking that was just the panacea, but you still have to treat every stock, doesn't matter whether it's a bank, a Coles, a big miner, in the same way, because remember the miners went into decline from 2011 all the way for 2016.
Correct.
So that's a long time.
The big four banks are still below their high of 15.
Not getting a return, and still the miners are below their 2008 high. So imagine if you're holding it and you just bought it prior to the GFC. So not a good strategy in the stock market, even long term. But people are probably wondering, well, how, if I'm going to buy long term, how am I going to manage stocks long term? Well,
that's the monthly chart.
That's the big $64,000 question, isn't it?
No, it's only, you can get it. You can get my book for free. Just pay the shipping and it'll answer it all in there. Like, that's not $64,000. But it's just, if you're more long term, you only ever need to look at the monthly chart. That's it. You don't need to look at everything else. You keep it really, really simple, and follow the rules in my book, and you'll absolutely blow it away. You'll actually get awesome returns, and you'll actually build wealth from that, and that's really what I'm saying. But
so Westpac I think's got significant potential. We're just watching it at the moment. There's a potential downside risk on all the banks at the moment. If we see it take out this low here, then it could slip further. So at the moment, it's just holding sideways. We really need to see it get back above that high, or at least this one in the short term. But, you know, it's doing well at the moment, and long term, I would say that it's a good prospect.
It is. There's so many good long-term prospects on our market, and it is. And this is the thing, is people go, oh, you know, the stock market, doing it myself takes a long time. 1 hour a month, that's it. 1 hour a month, monthly charts, just follow the rules in my book, and you will absolutely slam it. It really will, and you'll be surprised the returns that you can make on 1 hour a month, just on monthly charts, just following the rules in my book. It is just awesome what you can actually do. Is there anything else that you want to talk about tonight?
No, I think that's covered it. I think we've picked some really nice, solid, conservative type stocks for a long-term strategy with a bit of growth in there from some of the mining type stocks and some good dividends.
All right, so that's our topic for tonight. Now, before we get into our next email, I do hope you have got your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. So now's the time to get dialing. So pick up your phone, and the number you need to call is 039290 9988. So that's 9290 9988. While you call, we'll get into answering in the next email. So call us now. All right, the next email is from another Chris. This is Chris number 3, who says, hi, Dale and Janine. I've been watching your YouTube show for a few months and just bought your book. Thanks for sharing valuable knowledge and experience with us. My question is, now the time to buy a Blue Scope steel? I don't think it is the right time to buy. However, I don't get too many clues from the chart as I'm still learning. Could you confirm my chart reading? Thanks again. Regards, Chris.
Well, that's awesome that he's got your book and he's learning, because if you put a trend line up underneath that rise, he's going to see pretty quickly, without knowing a great deal, that this is not the right time to buy. So his instincts are working beautifully, I'd say, at this point.
You know how many people send me charts on their emails, and how many of them, the charts, and they're all the daily charts and stuff.
Yep.
And stuff like that, and it's like, They're pretty much
Are
next
these
to you.
people that are not studying with us?
Yeah.
Right.
Yeah, just people from YouTube just sending me charts in saying, can you have a look at this? Am I doing
okay.
the right thing? And they all send daily charts. And they're sending them like with 5 and 6 weeks or 3 months of view on it, and that's it.
Yeah, because that's how a lot of people out there teach. If you look on the internet, they're all looking at daily charts, but you may as well be like the horse with the blinkers on. You can't see anything around you.
Yeah.
Why would you want to trade like that? So looking at BSL, should we have a look at the chart then?
Yeah, have a look at the chart. Absolutely. I mean, I love BSL. It's a good stock, and I think it'll be good. It'd come good again. But right now, I think I'm agreeing with you.
Yeah, so you're looking at that. It's the trend has accelerated away up that. You can see the angle of the trend if we just put that grey line on, which is not. I'm not just trying to draw a proper trend line, but I'm just drawing one up under the rise here, and you can see that it actually broke below that, and you might even be able to get another one up there a bit tighter, but. Stock has to actually come back up to the trend line and bounce underneath it to confirm whether it's going to keep going up or not. And at this stage, we don't have that.
Look,
but I think this is a good stock.
Yeah, I do too. I think it's got
list.
a bit more to come down. I'm probably thinking it's going to come down into that sort of $17 odd range from where it roughly is. I mean, roughly it's down about 26% now, so probably somewhere down around sort of this level I think it probably could hit. But I don't think it'll probably go past about... I definitely won't go past sort of this sort of level, $12, $13.
All right.
But I do like it at the moment, but it's just a bit too early, I think.
Now we've got a question from Daniel. Hi, Janine and Dale and team. Love your weekly shows and also have both of Dale's books. Learning lots slowly and hoping you could take a look at PLS for me. I love the space and would look to hold this long-term pending how the stock goes and not hitting my stop. I purchased this recently per below on the breakout. The stock has dropped since and now broken a key support level. I'm thinking should have looked for the breakout of that triangle, but wait for it to pull back after the break, then bounce back off the previous resistance line and up again, given the run it has already had. Welcome your feedback. Kind regards, Dan. Whew.
Yeah,
that was a mouthful.
Dan actually sent some charts in. We'll just bring it all up. So what he was talking about is this, but he was actually using a daily chart, and so that's why he was basing he's buying on this break through here, and that's sort of what I was saying before. It's not solid enough.
And it's so high, in terms of the run. If you look at the monthly chart, how stretched it was. That's the risk.
And as soon as I saw it, it's basically the data. He only had a couple of weeks' data on it. And
so is he out?
I don't know. I would hope so.
It depends what his stop loss was, though.
Yeah, he bought in. He bought in on this breakout up here, so it broke up and bought in on it. But to me,
he's trying to buy with the momentum, though. I've got to give him
correct.
that. That's one positive thing about the way that he's doing it. He's not doing what a lot of people do, which is trying to buy it when the stock's still falling and could keep going.
Correct.
So in theory, a lot of stocks, when they do what he's just observed, might come back a little bit and then take off again.
And it does. It can do that, but he was using a daily chart rather than a weekly chart and looking at really what's actually happening on the thing. So the rules he was using are simple, which is not bad. I don't have a problem with the rule he was using because you can buy on breakouts and that, but it's not as simple as that. We need to do a little bit more work. That's really what I'm saying. And because the work he'd done was only about 2 or 3 weeks of time on a chart, there's just nowhere near enough.
Not enough data.
Not enough for me to give me certainty that I'm going to actually do it.
All right.
Cool. So
look, we've got a caller on the line. It looks
fantastic.
Awesome. We have Simon on the line. Hello, Simon. Would you say hello to us and let us know what state you're from, please?
Hi, Janine and Dale. Yeah, I'm from Victoria.
Oh, fantastic. You're one of us that's enjoying this lovely weather at the moment.
Oh, it's fantastic, isn't it? Absolutely
Don't you wish
wonderful.
you were in Queensland at the moment?
I certainly do. I wish I was in the sun somewhere.
Yeah, look, I just, would you mind sharing with us tonight what your question is and what the stock is that you're looking at?
I'm looking at Austral. I entered it at 2:30 on the 25th of May.
Yes.
21, and I'm just wondering, it's dropped. It's completely dropped. I should have got out of it, but I just wanted to let it ride.
Yep.
And I'm your thoughts, yours and Dale's thoughts on this actual stock.
Look, do you mind me asking, did you buy it with any sort of rules, or was it just that you'd heard something about the stock? Would you share that with us?
Well, it's a defence stock. I just thought, well, I'll put some money away and just let it ride for a while without having too much knowledge on the market, about the market. I just thought, well, over a period of time, I could double in money. I might not double in money, but I'm sure I don't know whether to stay in it or just get out.
All right, Simon, look, that's awesome. Thank you for calling tonight, and I can appreciate the position and understand it because we've all started from somewhere, so good on you. Looking at Austral ASB, you can see there was a 31% decline from that line that Dale's drawn on the chart there. If we look at the chart.
So that's basically where he bought it. He bought it in May, somewhere around here.
Okay.
And that's roughly the buy price where the green line is. So
now, the challenge is that even on a trend line, potentially, you may have been whipped into that trade and then it got out again. But until you learn to study the history of a stock and know whether that was actually the right strategy to buy it on, it could be a mistake. But he wouldn't. He's admitted he hasn't bought on any particular rule. But it's fallen so swiftly. And this is hard, isn't it, for people when they get into a stock and it does this sort of thing? Very frustrating. But at this point, given it's fallen 30% and it seems to be coming off that bottom, if you had bought this stock, which, in your in early days when you first started in the stock market, not right now based on the knowledge that you've got, but back then, what would you do right now? Would you just wait to see if it comes up a bit and then decide on a certain level to get out, or what would you do?
Look, I'd manage myself out of this, and I'd just, because whilst it's going up, I'm going to stay with it, because obviously you want to suffer the least losses you possibly can and hopefully get into profit. That's really what is the hope on that. And sometimes you're in that buy and pray method. It's like, I pray it's going to go up, and you don't want to be sitting in that because it's not a comfortable place to be. Now, right now it is moving up, so stay with it. But I would also I'd write down a price of which I'm happy to accept if it starts to fall away again. So just keep rising that amount up as it rises, and just keep rising what you'll accept for it if it starts to fall away, and then just get out and then start again.
Look, I just want to say the one positive thing for it when I'm looking at the monthly chart here is that it's come back to what looks like it might be a good support level.
It could have stopped falling. Yeah, but we haven't confirmed that yet.
No, and I mean, if eventually we get this trend line on the monthly chart and it unfolds down here, I mean, that could then turn around and provide a beautiful entry.
Correct. That's why I think we should stay with it and not just blanket exit right at the moment. Just stay with it while it's rising up, but then just have that protection.
It's just a bit concerning, the sell-off that happened the previous month, because it's looked like it's just pushed right down low, and that's sort of out of character with what it's done, apart from the decline that we've seen down here. So we don't know if it's padding out this bottom yet, do we?
No, we don't, and that's the point. That's the point. So if you want to talk to Janine and I, remember to ring 92909988. We're happy to chat to you. But we do have another question, and this one is from Caleb, who says, "Hi, Dale and Janine, would love your perspective on Orica. I do not own this share, but wonder about buying it if it confirms a new long-term uptrend over the next few months. And I think the next major resistance area is around $21, giving plenty of room for upside. Kind regards, Caleb."
Awesome.
He's a regular asker, isn't he?
He is. And so, look, I've got Orica there on the screen, and you can see on the monthly chart, I've put that $21 level there that he's talking about. I mean, from a long-term perspective, it is a really good level that he's identified that could be important around that point there. But there are other levels, clearly, that Orica needs to, the hurdles that they need to get over to prove that it's going up. Just simply because of the long-term shape of this thing. This is one of the stocks that I'd put in the basket of a Brambles.
Yes.
It's a risky share to trade. It's not, even Santos can be like that as well at times. Although Santos can have some really good trends. This hasn't had really good runs for a few years, not since we've seen it come out of this low in June 2016. Is it about to do that same thing again? We're not sure. It's taken out the low here, but could it take out the GFC low? It could, Dale, keep going and take out this low eventually here. So we're just watching the stock at the moment to see if that's the case. But it could produce a really nice entry at some point as well.
It is, but this is a perfect example of the buy and hold why you wouldn't necessarily do it. And it's what we're talking about in our main topic is always have an exit strategy or have a stop loss, because obviously buying, you could have bought at $21 back in 2006 and you've just collected dividends pretty much in that time.
Well, I don't think that Caleb was talking about it from the fact that
he wasn't. I think he's
just
more
mentioning
trading
that there's a potential level of resistance there, that once it gets through that, what he's saying is that then it should keep going up, which I think that he's got a really good point.
Well, look, there's $7 between roughly where it is now and there, so that's not a bad little effort. It's about 40-50%. So if you've got good rules on it, why not trade it?
Yep.
But right now it's not perfectly confirmed.
All right, the next question we have is from Stuart. Hi Dale and Janine, interested in your technicals for Lynas Rare Earths, current holder at $7.36. to me seems sellers in control and bearish short term. Roast me if I'm wrong, and long-term upside. Cheers, Stu. I'm not going to roast you, Stu.
Okay. No, bit of salt, bit of garlic, you might taste all right. I have a stew all the time. Okay.
Beautiful.
Bad joke?
All right. I don't think your wife likes stews.
Oh, no, she doesn't.
No.
No, that's why I call them casseroles.
Okay, so Linus Rare Earths, you can see on the left-hand side, it has had quite an extended run, and the indication of when it's lost its momentum, we can see here it lost momentum in March 2021, and then again in September 2021. Because that's happening, it often means that the stock could be topping out. We don't know that yet. We've seen this stock come back and take out this prior low here, which is a bit of a concern, given that it's just done this. This was a similar thing to one of the other stocks that we just looked at, in terms of the fact that it had gone through a previous high, gone to a new all-time high, and then taken out this prior trough. So the real risk right now is whether it's going to come back and take out this low here, but I'd be really concerned if it went down in any speed below that August 2021 low there. At the moment, it's trying to stay above it.
It is trying to stay above it, but it looks a little bit more bearish than bullish now, doesn't it? I mean, especially when you see this huge big move straight.
Is there a
through
trend
there.
line exit potentially there or not?
There probably would be. I've got to put my glasses on for that, but you'd be pretty close. There probably would have been one in here, in this area through here. There definitely would have been one through there.
Yeah.
But sometimes stocks do that. You exit and then they come down and go sideways, and they take off, and they have that one last effort because everybody's excited about it. It's come back a bit cheaper.
Oh, I can get it for a lower
and
price.
they go, I can get it for a lower price, and they push in.
it back up.
But those people run out of money pretty quickly, and so it exhausts itself pretty quickly, and then it comes right back down, and it does have a sizable correction. So there is a danger of that actually happening, of having a sizable correction from this stock right now. If we are to still see it fall, but if it breaks through that, it could even head down right down to around that $4 range, because a lot of people were buying into rare earths at the time. So to me, sometimes you will see that get out of the stock and it just goes up on you, and then some people go, oh, I've got out, I'll get back in.
But the point is to just wait for that confirmation, isn't it? And decide where you're going to exit, and then if it goes below it, then that's your stop loss, and you choose what you're comfortable with in terms of the level of risk that you're willing to take.
I think there's more downside risk at the moment. I think it's probably going to fall away a little bit more. That's my thinking.
All right, fantastic.
Okay. Well, the next question we have is from Brooke, and Brooke says, hi, Dale and Janine, can you please have a look at Anteo Tech? I've been interested in this stock and it's been on my watch list. Should I wait till to confirm an uptrend before getting in, or with the recent rally, have I missed the boat? Would appreciate your thoughts on this. Regards, Brooke. If you do want to talk to Janine, I remember 92909988. Give us a call now.
Now, I believe that we covered this stock probably a week or a couple of weeks ago.
This is one of my hot stocks.
Yep, and look, it's actually still to this day it's managed to get through that all-time high prior to the high there in 2001, but a very checkered history there. We've seen struggle to get through this high here in February 2014. Recently, we've seen it move up again. If I just look at the monthly chart and expand it up, but you know, you'd have to really question about who's going to buy this type of share. It's a certain type of investor that can handle that level of risk, isn't it?
Yeah, it is, and it's not the stock most people should be entering into. It is, and like I said, when I put it on my hot tip, before it took off more recently, that hot tip, I just said it's a real higher risk stock, and so you really do need to know what you're doing. You need to know, you have to have tight entry, tight exits to capture the profit, because it can take off over a few weeks, maybe a few months, but then it'll run out of steam and then it'll go the other way.
All right,
and
then
that's what we're seeing at the
let's
moment.
have a look at the weekly chart then, so we can get a better idea for it.
Cool.
What I find interesting, first of all, to answer the question, I don't think this person is too late. That's my first point. I wouldn't be buying it right now, because this week, obviously, it's been sold off. When you see that sell-off after an initial rise, that's the market basically testing the resolve of the buyers.
Yes.
So if we see it then move up from there, it could mean that the buyers are winning, and then we're more likely to see it continue to rise. But of course, you've always got to have your stop loss anyway. I don't think that we're too late, but obviously if it goes below this low here, then you wouldn't even be, you'd steer clear of it.
So I'd be staying out of it for a while until it gave me some signals it was going back up again.
Started moving back up,
Yeah, because I mean right now it is moving down, and as you can see there's a bit of indecision. If you look at these last couple of weeks here, there's indecision in there. So that's where some of the shorter term.
So what you're saying, indecision to people who are haven't started studying this yet, is where you've got the stock actually turning around at the end of the week.
Well, you've got a tug of war between buyers and sellers. Like, not one side is actually dominant on the other one. So you've got buyers coming in and sellers coming in, but there's a lot of tug of war between the two, because what makes the market moves and stocks move is when you get disequilibrium between buyers and sellers, not equilibrium. When buyers and sellers agree, price doesn't move.
Yes.
And so that's sort of what we've seen those last couple of weeks, because, you know, you had the stock closing there at 28 cents. It closed there, what's that, at 26.5 cents, and then it closed here at 26.5 cents. So there's a real tug of war. Buyers trying to push it up, sellers coming in saying, no, I want to take some profit. So I want to know whether this is just profit takers from the early entry through here, or whether this is a sustained move by the longer term downward move from a lot of sellers getting out of their stock because they don't like it at the moment.
Well,
so
your volume will give you some indication on a low liquidity type share as this one is. This will, the end of the week, we should know whether volume's strong or not, whether the conviction of the sellers is strong to the downside.
So what I want to see with this is if it does go down, I want to see it stop before that low, stop somewhere and then start to move up again. If I start seeing that, then I'm going to get more excited that there's a longer term move starting to happen.
Right.
So that's really what I'm looking for, and then having some rules around that. Now, it may not go all the way to the bottom, it may not stop, or as you said, it could go through that bottom.
Yeah.
If it goes through there, it's all over Red Rover.
Yeah,
so right now, if you're not already in it, you've missed the boat.
Yep.
But you may not have missed the boat more medium term. That's what we're saying. Yeah.
All right. Now we have a question from Chris. I thought you said that we'd finished the Chris's.
We had 4 Chris's. There was Chris C, Chris B, Chris D, Chris D.
Hi, Dale and Janine. Janine, this one is for you, as I've heard you talk, I talk a lot about stocks that have personality changes. I'm watching a stock car that might have a new personality that started in July 2019. I'm just wondering, what are some other indications to look for to help determine this apart from volume and a new trend? Kind regards, Chris. All right.
No, we're not going to tell him because that's in our courses.
You're just shutting me up, aren't you, before I get started?
Well, he says you talk a lot, didn't he?
He did. So that's probably why he's asked me, because he thinks I just flap my jaws.
Because you'll give him all the answers.
That's right. But look, I actually like this stock.
Yeah.
I think it looks really good.
It does look really good.
Really nice. Look at the monthly chart there. We can see, if you're wanting an example of a stock that's doing well at the moment, this is KAR. From a long-term perspective, it's come off a long-term low, and there's some short-term resistance that I can see, which is not far above where it's trading at the moment, probably around $2 or $2.40. But in the short term, we can see that it's really exploded out of the blocks here. And because you see this sort of acceleration happening, often the stock will come back and check prior moves. So it might actually go up for a little bit more. We might see it head to $182, and then the run is likely to peter out temporarily, or at least go sideways for a while. But I think it looks good.
Yeah, it does look good. It does look. It looks really, really nice at the moment. And I think if you're not in this stock, I don't think you've missed out. I mean, looking at that monthly chart, there's plenty of room on that, isn't there?
But it just depends on the volatility, because the volatility could stop you out if you're trying to get in when there's, at this point.
But this is sort of something that we show people. Look at the volume through from about here, some October 2019, masses of volume.
Yeah, often when a stock trades back above $1, then it may have been reset because all of this, interest around the energy sector. It may have been picked up by certain fund managers, and all of a sudden it's on their watch list. There's a possibility.
Yeah, but to me, that's what you really need to watch for in terms of, Chris, about changing personalities. Like Janine and I talk about it all the time, and it really is about the more volume.
It's not just volume though, it's
not
trend.
just volume, it's trend and the whole
So,
range
I mean,
of
look at the volatility of the personality of the stock over time, and how it's actually just turned on a dime and then gone up again, turned around again. This volatility we're seeing on the chart, all of a sudden after COVID really changed it.
It did.
COVID actually put it onto a better trend.
Yes.
So this is a personality change, as Chris number 4, is it?
Yeah, Chris number 4.
Chris number 4, right.
I was going to say C2, but he's C43PO. Something like
Chris number 4 rightly pointed out. So just look at that. It is beautiful. So good topic, and thank you very much for that email. We enjoyed that one.
All right, we've got a call now, and I think we've got Armin on the line, have we?
Oh, yes. Hi, good evening.
Hi, Armin. Where are you from again, mate?
I'm from Sydney.
Oh, fantastic. Armin, glad to have you on the show. You've got a question for us today?
Yes, Tal. I just want to check, you said about the book you're giving away.
Yes.
Just need to pay the postage. Is that the Accelerator Wealth, the book? you talking about?
It's my first book called How to Beat the Managed Funds by 20%. It's actually this book here. So that's the one I wrote. So you can get that on our website. I think it's right on the homepage. You can click on it, get it. All you got to do is pay the shipping, and then you. But you must promise me if you buy it, you have to read it.
I think I got this one last week, but
did you?
one also you're giving away. I'm more than happy to pay the cost.
There you go. Well, you have to buy this one though. Then, if you've already read the other one, you have to buy that one. But do you have a question for us other than that?
No, that's all. I just want to check which book you're talking about. I thought it's a special offer. I thought.
Yeah, no, that's the book. Are you an investor or are you more of a trader?
More as a trader.
Okay, yeah. So the first book is really more about investors, about getting people out of buy and hold and be more active. So it's a really, really good book to read first. But if you're more interested in trading the market, then this book is more taking that to another whole new level and talks really about trading, getting into trading, some trading techniques to really help you. So have a read of the other one first, obviously, and really start to hone your techniques and skills and understanding of the market with this one. And when you're ready, you just pick that one up. It's pretty simple. But
not a problem. I'll buy this one then.
Yeah, and you probably have a lot of questions for us on the stocks anyway, so we look forward to having you on our show in the coming weeks and or months. So you take care, mate. Thanks for the call.
Sure, definitely. Thank you. Thanks for your show.
My pleasure. Bye-bye. All right, we're going to move on.
Well,
now.
that's an interesting question, isn't it?
It was an interesting
because
question.
It gave you an opportunity to talk about your book.
It is, but people do ask me a lot of times, they go, Dave, you've got 2 books, which one do I read first?
Yeah, that was good to explain that.
And people often don't know, and sometimes they buy this one and sometimes they buy this one. So if you're an investor, buy that one. If you're more of a trader, buy that one. But this is the best one to read first if you're sort of new to the market, a bit unsure. So, but as I said, you can get that for free, just pay the shipping, that's all we ask. So that was it, and thanks Armin for giving us a call and allowing me to sort of explain that to everybody. So it was a really, really great question from that point of view. But if you want to be like Armin and get the book for free, as you know what to do, just go to the website and pay for the shipping.
All right. Look, if you called into the show and you missed out this week because we weren't able to take your call, and we really apologise for that. We really want a chance to chat to you. We enjoy talking to people. It's not the same as just getting an email. Just make sure that you write your question down and be back here to watch the show next week, as you'll get another opportunity to call in when we give you the cue to do so.
Fantastic. Now remember that the best way to have your questions answered is to call between 7 and 8 p.m. on Tuesday. That way you'll beat all the Queenslanders who are now behind us. Otherwise, email your question right now to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line. Also remember to in order to show your appreciation for us helping you by answering all of your questions and educating you, all we're asking is that you subscribe to our channel first and then send your email in. And also remember, like the show. We don't get enough likes, do we, Janine?
No. We want more of those likes, so go for it. Well, that's it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
Okay, now remember to put this show into your calendar to join us right here on the Australian live Australian stock market show every Tuesday, 7 to 8 p.m. and my mouth's still not working.
As always, thank you for joining us, and we hope you've had a great week. We look forward to you joining us again next week. For now, goodbye, good luck and good trading.